Hey guys, how are you? This is Ishai Breslauer, your host of the CRE Shark Eye Show, where we talk commercial real estate. Today with us is Adam Lipkin. I just, before we started, I had this phenomenal conversation with him, and I'm sure you're going to enjoy this conversation coming up. He's an expert in real estate finance, and we're going to hear so much about it. Adam, thank you so much for being with us.
Yeah, it's a pleasure to be on the show with you.
You know what? Before we start, give us a 2-minute elevator pitch about your business.
So you might have seen I got the handle, the C-Pace guy, and I actually did go so far as to trademark that because somebody asked me. So I'm a big believer in branding, messaging, niche, and even within the world of commercial real estate finance, there's so many types of finance, right? Products, say, across the board, construction, bridge, term, depending on the life cycle of the deal, asset class. So I was always really interested in innovative financial products, for lack of a better word. And I got niched into this one called C-Pace. It's one of these innovative tools in the world of green financing. We were chatting a little bit before that. I think there's just so much excitement around what you could do with this movement around green and making things more energy efficient, more renewable, more sustainable. And frankly, just from an economic standpoint, there's incentivized financing that helps reduce your rate, increase your proceeds, just have a lot more of a return by optimizing your financing. So I became the C-Pace guy. I knew nothing about this product about 4.5 years ago. I think a lot of folks today that are listening are still like, what is this? C-Pace. And then I said, let's become an expert in it. And what I realized pretty quickly is you need to know how to navigate new products and educate people on it. So what I do is I help folks that are typically developers with a variety of options to execute both with banks and without on mixing in C-Pace financing to help them get potentially higher leverage and reduce their overall cost of capital.
Okay, and we have to obviously learn about it. We have to educate everybody who's listening about the C-Pace financing so they can run. You guys can run.
It's an extra option. Yeah.
You can run to Adam and can learn about it more. But let's, before we talk about C-Pace financing and your expertise today, let's go back in time and talk about how did you get into this whole real estate scene in the first place?
Yeah, absolutely. So background, I'm down here in South Florida. It's usually pretty solid weather year round, little hot these days in the summer. But, I'm a born and raised South Florida guy. I was in New York, 20 plus years ago, right out of school, in real estate, doing more like consulting and analysis, due diligence. I was at a big five accounting firm. I think it was Big Four at the time after going way back, for the listeners back in, 2002. This is right around the time that Anderson went under. And so there was 4. I joined Ernst & Young in a real estate advisory group. And I was just fascinated more on the deal-making side of real estate than the kind of like the number crunching.
One second, I'm sorry for stopping you. Which year was that?
2002.
2002. Wow. Okay, go ahead.
Yeah, going back 20 plus years ago, I was in the city. It's crazy. So I go up to New York, monthly now. I'm with Greystone, and we're headquartered like right in kind of like Central Park South and 57th Carnegie Building. So I love going up, but I love always, you just have all this nostalgia when you think about living back in this place, 20 plus years ago, and you see how much things just keep on growing so much. But going back to 2002, got my start, moved up to New York, was working in this more consulting role at E&Y, but yet I was running around on weekends and evenings, getting people rentals when I was working, as like part-time with one of the rental companies up there, City Habitat, which is still like a popular one at this time. And I love that deal-making side to make real estate deals happen. And so what ended up happening is it evolved to say, how can I do that on the commercial side? And with my background in capital markets and structured finance, I said, I really think I would gravitate and do better with helping people more on the arranging capital side. And so, pretty shortly after I got my first stint, I was at one of the, big brokerage shops, HFF, now JLL, helping arrange large development projects, typically putting together, senior construction loans with, mezz or preferred equity. And that was probably my initial interest in saying, wow, there's these guys out there that are, I had the privilege of having like a really awesome mentor at the time who's still a dear friend of mine to this day. But, just seeing through this, wizardry, this financial engineering, how you could just do these unbelievable things in structuring deals to manufacture enhanced returns, reduce the capital that you would have to come up for the deal with. And so I was amazed by it. And I said, it's fascinating. I think you know this too, just with your background, that, folks that are developing $100+ million projects oftentimes are raising capital, whether it be through third-party equity and then also through various types of debt instruments, maybe putting in 1 to 5%, probably closer to 1% in themselves, as the sponsor, and then having their team. And so I found that such a cool thing. I ultimately want to learn how to use financing creatively to, help people to just do better on their overall projects. I found that your financing costs are such a huge line item when you think about it, in your real estate costs. And I found that it stops a lot of deals. People could have great sites, they could have a great business plan, but if you don't know how to properly frame and be able to secure debt or equity, you can't do anything with your project. So I really like that part of it, is that through being able to tell the right story, frame the project right, you could secure capital from all types of places that could help you unlock a vision you have for some, unbelievable projects. So I had the privilege of doing that for years and years. And I think that then evolved to say, what was new happening in this space? And it led me to this CPACE product through a long-time lender relationship about 5 years ago. So,
You know what's incredible here to me? I talk to a lot of people, and some people come from the financing part and they get excited about, they want to go to operations. They want to go more to the management part, asset management, operations, to be hands-on. And you came and you went to the hands-on part, and you dealt with the rentals and so on. And they said, listen, there's power in the financing. There's power in
getting money, right?
Yeah.
There's power getting the money.
And then without it, you can't move. And if I become an expert with that and understand the structuring, a deal from a financial perspective, and how to get all the, whether it's senior, mezz, pref, whatever it is, and I know how to do it, and I understand the structure, and I can help operators get the right loans, that'll be my thing.
Yeah, it's a huge value add to be able to help somebody guide them towards getting, unique capital. And that's the thing too, hit on that nail, that it's there's a lot of products that have somewhat of a perception, even though I would beg that it's not as commoditized as people think, but there's a lot of products out there that people are like, oh, I could go to so-and-so or this one for this product or that product. And so it was very important to me to really establish an expertise in more of a niche product that people just really needed more guidance in. And right when I saw the CPACE, I said, oh, this is going to be huge over the next decade. And I kind of saw it with CMBS. I had an ability to see CMBS, kind of, we'll call it, after 10 years of seasoning. So you kind of know the back history of CMBS. It was really kind of early 90s that it got going. A lot of people thought for years, this isn't going to turn anything. And then fast forward 10 years later, doing, tens of billions a year in financing. And so I was with one of the largest B buyers of CMBS securitizations. This is like back in 2004, LNR, which has now since been purchased by Starwood. And that was another innovation in finance. And so I kind of had seen some of these patterns of there's this adoption cycle. And so I kind of saw that playing out with CPACE, that, wow, here now is another product that has an ability to really gain some momentum over the next decade. And it's a long game with these things. Like, they don't happen overnight. And it's still early, use like a baseball analogy. We're probably still in like the second or third inning realistically. But I said, man, is this thing going to hit? And by 2025, probably 2030, this is going to be just like a go-to bucket that real estate developers and operators are going to say, how much CPACE could I get on this transaction? The same way, like, how much senior debt could I get? It's just going to be another bucket you're going to look to see what you could tap. So I said, let's get in early. Let's get that attention to be known as like one of the go-to guys for CPACE, the go-to guy, and use that to differentiate. So that was my latest journey over the last several years.
I love it. Let's explain. Let's take 3-4 minutes.
Yeah.
And explain to all those who don't understand what CBase is, because some people are like, hey, I'm a commercial real estate guy. What the heck is CBase? Let's give them like a briefing of what is CBase so they can understand what it is.
Yeah, it's like I still struggle with this 5 years later, right? But at a high level, it's a type of green financing, right? So it's a bucket of capital that you might be able to access as a developer or as somebody that owns real estate and is doing work to your real estate, like capital improvements. And it's something that's made available through state-enabled legislation. So states say, hey, Yishai, we're going to give you access to a bucket of capital for your next development, and it's going to be able to be for any of the things that are going to be somewhat related to your energy bill. So when you're building, think a lot of your mechanical work, all that MEP work, your lighting, your insulation, it's a ton of stuff that's going to be in every single development project. And you're going to have access to a bucket of capital that, may be priced efficiently. I mean, the terms these days on CPACE are, actually even more favorable relative to what the market's done in terms of the recent run up. But you might have access to tap a bucket to give you more capital to fulfill on your business plan. But look at it as a green financing product that could help you be able to get, overall better return and maybe even a little bit more capital for your ultimate development projects.
Beautiful explanation. Couldn't have done better. How do you say? I couldn't have done it better myself. It's your field. What
you got to focus on the benefits of it. Somebody I can tell you, it's a public-private partnership and it's this structure. Yeah. What do you want to know? What can I get from it? The benefit is you might be able to get more capital at a lower cost.
Right.
Yeah.
Let's go through the process. I have a property. The property is moving forward. It's acquired a long time ago. I need TI, tenant improvements. I need CapEx. I need whatever. I don't have the access to this capital. Okay. And I want to do things that were not planned before. I want to do some more creative stuff in order to be able to take, this whole property one step ahead. I'm coming to you. What is the process? Because you talk about energy and you talk about all these aspects in it. If you could walk us through, what would I have to do, or what would you have to do for me, or a team that is coming into play in order for me to be able to access this capital?
Yeah, so I'll answer that, but let me just back up a little further. So I had been before. So right now I work at Greystone. Greystone is one of the largest private real estate companies, in the country.
Yes.
Founded by Steve Rosenberg, legend. It's such a unbelievably entrepreneurial place. It's so much happening. What I want to do, having been in a CPACE shop that was acting as a lender providing this type of capital, is I said, you know what? The bigger picture is you take it to a much bigger platform and you be a guy that can mix in CPACE across all the financial products that the company offers. And then if you can't do it in-house, you can still help to arrange it and be a takeout source of, let's say, a bridge or permanent loan to be able to, let's say, exit the CPACE on a construction loan that you arrange. So first of all, so just even backing up to get, what I'm doing now, I'm helping people mix in CPACE, and I have, all the relationships from my background in that industry and that niche area, but I'm also not relying on it. So for example, if I'm going to go to the market and let's say you have like $100 million multifamily development, or even more recently, I did this with a lot of senior housing development, a lot of folks that are building with assisted living and some memory care. And you're saying, hey, I'm building this, I need to get some money. I'm looking at a variety of solutions, and I'm looking at seeing what can I do for debt. And then I'm saying, where can I bridge the gap? And I'm trying to mix in CPACE to maybe go from, let's call it like a 60 to 65% leverage to maybe closer to a 75 to 80, and reduce the developer equity needed to be raised. So that's how I'm typically doing it. For your scenario that you mentioned, which is really how CPACE got started, is, you have somebody that owns real estate, let's call it like an industrial building, and they want to, they need to replace their chiller. They need to replace their roof, a ton of stuff that typically would require equity. You'd have to, make a capital call to your partners, you'd have to raise it. And, it could be $1 million, it could be 500 grand, but it's money that would typically be equity in a lot of these cases. And so what you'd be able to do is look at CPACE as it's like a lender essentially that gives you an ability to use CapEx dollars, and you get to finance some of these things that you otherwise would have paid out of pocket. So let's say, hey, I got to replace $1 million chiller, right? So instead of having to come out of pocket, you might get a CPACE quote, and you might be able to finance that $1 million over 25 years at a rate of 5.5%. And, it'd be fixed rate, it's non-recourse. And you'd have flexibility to maybe even be able to pay it down, like a step down prepay, maybe after, like first year, maybe it's like a 3-2-1 or something. So it's now giving you a financing ability for a lot of your CapEx on existing real estate. What I really liked about it was using it for development, and really mixing it in while you're actually going out to the market, getting that construction loan and using it as a way to replace more expensive capital, whether it be mezzanine financing, preferred equity, or even, I'll give you an example, going back to that, $100 million development. Let's say I go to a debt fund and the debt fund, is, going to charge you 8% to get maybe 80%, even now it's maybe 75%. What if I replace 20% of those dollars with CPACE, maybe priced at a 5.5 rate? So you're essentially blending down that cost of capital. And so that's really what my niche had been for the last several years. Is I was typically working with development projects, folks that had a need for higher leverage, non-recourse financing, and using CPACE as a mechanism to be able to reduce that weighted average cost of capital. And in some cases, we even were able to get higher combined leverage with that construction lender. What the move was last year was to say, you know what? There's a lot of people doing this CPACE thing. As much as I know it's new for a lot of folks hearing it, but what's really needed is a lender that'll permit it at the level you need. So that was really my pitch over the last couple of years to a bunch of lenders I've worked with, including Greystone. And it was like, hey, why don't we add this to the mix and help to arrange this and have me as the guy in-house? And so being a guy in-house who's, that's my calling card, it's really led to a lot of fun opportunities to be able to interact with folks that are like, Adam, hey, I got this HUD deal. Could I bring in CPACE? Or I got this bridge deal. Where's the CPACE angle? And so in some cases, there's no angle because some products just don't allow it yet, or they don't allow it as aggressive as you want. But others, I've been able to create some really unique structures as like what I call a CPACE plus, right? It's like the construction plus CPACE, which is really needed. CPACE on its own, it's a partial solution. And so if you don't have a lender, it just gets people frustrated. Like imagine I go to you, hey, Isha, I got you covered. I'm gonna give you a CPACE quote for $20 million on that $100 million project, but you don't have a lender that'll do it or allow it. You're just like, Adam, you just wasted my time for the last 90 days telling me that you got me covered for the CPACE, but no lenders are gonna look at it the way I want. So that to me was the big missing, is you really needed to be able to either be the lender, ideally, or if you can't do it through your own balance sheet, be able to bring in a lender that could be a partner that allows that CPACE at the way that you want as a borrower, at that leverage that you need, that still gets you that kind of rate that's going to make the deal work. And it still doesn't exist to this day. Like nobody's really doing effectively senior plus PACE execution. You got some guys running around saying, hey, we're going to quote a CPACE for you, but it's like, who's the lender? So I really like that. That was the big calling card, is to say, let me be that lender. And it was just such a great opportunity to be able to step into Greystone, have such a wide range of products, some of which there's a great opportunity for CPACE, some of which it's coming. So,
what I'm curious about? I'm curious about the whole CPACE processing and the whole system around it. Is there a difference in the underwriting process, approval process when it comes to that?
Oh yeah, for sure. I mean, look at it like anything new. So some lenders, you tell them, let's say you go to a senior lender that's going to do like a construction loan, and you say, hey, I want to bring in some mezz or prep. And they are like, we don't allow it, right? Or they look at it too conservatively. So what I loved, and this was my early experiences as an advisor, is it's not a one size fits all. There's so many lenders out there. And you know this. I mean, there's like so many profiles and so many preferences. And some lenders will do this, based on product type. So this guy says, I don't want to lend on this kind of product, hotels or senior living. And this one doesn't want to do construction. And this one only wants to list. So it's the same idea thing, even when it comes to allowing things in the mix. You go to a lender, hey, I want to bring in a ground lease. So like, ground lease, I don't want to allow that. It's the same exact thing with CPACE. So some lenders are just like, CPACE, SHMEPACE, what is that? I don't want to allow this. I don't know what this is. I don't have a playbook for it. So the biggest thing is you have to have a lender. I would say ideally, I always suggest find one that ideally has closed on a CPACE deal, know their terms, how they underwrite it. But it's exactly what you just mentioned. You have to have a way of underwriting it. It's an obligation, right? Think about it. It's still financing. So you need to know what's the annual obligation of the CPACE loan. What's it do to my coverage if I have this in addition to the senior loan? What does it do to my leverage? And so typically the right way to look at it is you'll do what most lenders do, and they think about things like, what kind of available cash flow do I have from the property to service my debt in addition to the CPACE? How do I get taken out of this thing once you fulfill your business plan? But there's still a lot of folks that they just kind of are like, don't want to deal with it. So it's a real interesting thing where you could differentiate and say, look, let me show you how we could get lenders on board. And we already have lenders, or we're the lender. So it's a huge area. It's a big missing. It's not obvious. And people ask things like, hey, will a lender do this? It's like, Maybe, under the right circumstances, do you have the right product? Are you the right person? Are you able to get a loan already from a lender on your project? Forget about the CPACE, right? So I love that you could really add that value. Going back to your earlier point, is that you could show up with some unique insight and something that there's more curiosity around. And look, there's a lot of BS in these areas. Like there's a lot of people that oversell it and they act like this could be an end all be all. And it's like, no. This isn't going to work here, but let me show you some alternatives that can. So that's the other big thing is, CPACE doesn't work in a lot of cases either. So it's good to have other options and you just maybe look to see where you could mix it in, but don't be dependent on it.
So what is the line in the pro forma that makes it different? Like there's a line or two, obviously.
Yeah, I'll give you a perfect example. There's 3 ways that a lender's going to look at CPACE. The first way is they're just going to say, we're not going to permit this thing. We're not going to allow it at all, right? So you're done. The second way is the lender's going to say, and just to give you the structure, I don't want to get too into the weeds, but let's do a little
Right.
bit. So if I'm providing that CPACE financing to you, my form of repayment, and this is the only part that the government steps in, there's no financing from the government. They just provide a mechanism that allows me to get repaid as part of the tax bill. So I get to show up and I get a non-ad valorem assessment added to the tax bill. That's my guarantee that I know I'm getting paid back because I'm part of the taxes. So some lenders might say, you're priming me because you're, at the level of property taxes. The flip side is that you have to act as a tax. You have no rights. There's no financial covenants. You can't accelerate the amount owed. You can't do anything other than sit passively and collect your payment with the taxes. So some lenders say, that's not so bad. Like that's not as aggressive as maybe a mezz or prep piece behind me that quote unquote is subordinate, but boy, could be aggressive if anything goes sideways. So I find some lenders actually say, I'm fine with this CPACE. Let me just underwrite to an appropriate leverage that I'm okay with, that I typically feel comfortable getting taken out of. That's kind of the analysis that most construction or bridge lenders would do. But the line item would be it adds to the tax bill. However, it's what I call substance over form. It's a financing charge. So is it really something that needs to be underwritten above the line as like operating expenses that you need to run a property? No. It's like a financing charge. You pay this thing off early. So I think that I always think there's an opportunity when there's misinformation, right? So right here, people are like, well, wait a second, it's at the tax bill. So I have to underwrite it above the line. So second bucket are the lenders that don't allow it, but they say, we have to underwrite the CPACE as above the line as part of taxes. So imagine this scenario. So now you have stabilized income on a senior living deal, multifamily deal of $3 million. And I want to include this CPACE and the annual charge is going to be $500,000 of interest owed on, let's say, a $5 million funding that I'm going to give you to build your project. And you're going to add $500,000 in expenses on the CPACE to take down my $3 million to $2.5 million. It's like punitive, so now it's going to limit that loan and it's going to be almost like not even a market rate deal. So lenders might say, we'll let a CPACE, but it basically reduces their proceeds. So if you're a borrower or the broker, you're like, well, I don't want that. Right? So that doesn't help you too much either. So then the third bucket is the lenders that I think rightly say, okay, let me strip out this CPACE, let me underwrite what's the stabilized income, and then I'm going to say, what's that value? And then what's a loan I would do on that? And make sure that my combined construction or bridge loan plus CPACE is at a clip below where that takeout stabilized loan is. So for example, let's say I know that my takeout on a multifamily deal is an agency loan and I get to 50 million. You might say, all right, I would be comfortable at 90% of that 50 million, right? More or less, let's call it like somewhere in that range of 45 million. So you want to make sure that your construction loan, maybe it's 30 or 35, maybe your CPACE isn't more than an extra 10, but you want to be below like 45. That's a smart thing. And I do that even with one bucket that I can access within Greystone, but even groups that I arrange the capital for, it's the same thing. That's a smart way to do it. Because you would imagine you're going to just pay off the CPACE with the construction loan once you stabilize anyway. So I think that's what you'll see more and more lenders doing. I think it's an evolution. I'm obviously biased, but I'm of the opinion that over the next 5 years, there's going to be a HUD plus CPACE angle. There's a Freddie CPACE angle. There's a CMBS CPACE angle. So having this niche, I kind of felt like what a cool thing that you could still see a variety of deals, cross asset classes, but you have this, niche product that you could really add that layer of value to folks that are like, hey, maybe I could tap this bucket. And when I'm going to the market, I could really start to look at options that could mix this in and maybe get me even more enhanced financing. So that's kind of where I came from. That was the why behind it. So,
what is the educational curve in terms of banks, in terms of the financial institutions that you have to educate, obviously, along the way? In the very beginning, of course, when you started this thing.
Yeah.
I want to understand the struggle. Take us through it. What do you have to do in order to educate everybody and tell them, hey, don't be scared. It works. It's a normal loan. It just has a few other components.
I'll tell you, man, my friend, it is so simple. It is so simple. It's just getting attention. So what I find, I always recommend, if you have leverage, as in you're a strong borrower and you have a desirable project where lenders want to compete for your business, it's like a no-brainer to at least explore, could I get lenders to, like, imagine this scenario. You're a hot borrower, people want to do business with you, you have your latest development project, you know you're going to have lots of options. The same way that you're trying to, go to this lender, hey, can you bring in the rate a little bit? Or go to this guy, hey, can you add the leverage? What a smart option to say, hey, listen, we see that we qualify for this program. We're in a market where the CPACE thing is active. And on this $100 million project, it looks like we could get up to 20 million. You guys open to like some amount of it, that maybe you could take the leverage that you're already comfortable with of 60 million to maybe 65. The worst they would say is no, but what a lot of lenders say, especially if it's an originator or you have a relationship guy, is like, hey, let me figure this out. I know my credit guy. I know how he looks at things. He's going to focus on, could we get out of it? And so to learn about it is super simple. It's like a no-brainer to learn about it. It's getting the attention to learn about it. So I find that you really want to have a project that there's going to be a little bit more of a competitive bid. You're going to have some lenders that really already want to do it. And maybe if they spend a little time to get comfortable with the CPACE, it means them winning the deal. That's what I always found was the best way to approach it. So it's very easy to learn about. It's just getting a lender to want to spend a little bit of time, get that attention to, take that minimal amount of time to figure out that it's not so scary.
So the education is not the hard part. The hard part is not, meaning the sell is not a hard part. The hard part is the marketing part, is to get the attention. It's very,
for sure. 100%. So imagine this. Imagine if you're a lender and you're flooded with business, and now all of a sudden, you got 100 deals on your plate and they're easy, good guys. And all of a sudden the one guy goes to you and says, hey, I want to use the CPACE. So like, CPACE, I don't want to deal with this. Yeah, we don't really do it. So what's interesting, what I found happen, especially in the last 90 days with this major run-up in rates, is, first of all, the CPACE rates, they're tied to a longer-term index. Usually it's going to be a 20-year treasury, right? So that hasn't moved nearly as much as the shorter-term index. And then on top of that, you've seen the spreads in CPACE have actually come in a little bit in some cases. And so I've seen that it's gotten really interesting when folks are like, all right, my leverage has come in 5-10% on average, on across the board, let's call it, from construction to takeout. What am I going to do? So I find that CPACE, and then the other area that I spend a lot of time on is ground leases, and this is like the Jay Sugarman brilliant model with Safehold, the bifurcation. These are the two products that more and more folks are like, where's the CPACE angle or where is the ground lease angle, to be able to manufacture a little bit of a higher overall leverage in a way that works for lenders. So I think that it's just now gotten even more interesting with CPACE being in the 5 still for rate. And, lenders, especially if you're talking about debt funds, but, generally non-recourse financing has now gotten into the, let's call it 6 to 8% to higher. If you're talking about construction, it's like 8 to 9. So it's definitely something that's way more on the radar. The industry has gone up tenfold in the last 5 years. When I got in 17, maybe annually, maybe there was like 100+ million that was done in construction. Maybe now you're going to see closer to $1 billion. So it's moving. There's a lot of momentum with it.
Talking about markets, talking about industries and markets, especially to the environment today. Would love to hear your take about what's happening to us today. We have crazy inflation. We have stock market that is plummeting. We have crazy things. Even the real estate market is not endangered just like it was in 2008. But yes, there's going to be a correction for sure. And with interest rates flying high, the financing environment becomes something that we didn't see in a while.
Yeah.
Can you tell us about that and about your perspective about it, meaning what you see, what you think, where are we going with this?
Yeah. So I'll start it out and I'll say I don't have a clue. I mean, I've been in the business for 20 years.
Love it.
And I love, everybody's going to give you their opinion and everyone's happy to do it. And I'll then give you my
I love to
opinion.
ask it. You know what? I had few mega developers, operators.
Where's the rates going to go? You know, like,
and they all said the same thing. I forgot my crystal ball. Nobody knows.
Yeah.
But we see that it's going south right now. So where are we?
So I'll tell you what I like is I like that financing that has flexibility. I like financing that ideally has non-recourse components so that you're not as on the hook as you need to be. God forbid you need to have more time. You have ability to be able to, I mean, that's a lot of things too in real estate. We know that you have time. A lot of times things could get worked out if you have an extra 2 to 4 years. Maybe business plans get delayed. But I think when you have too much leverage in some cases and there's too many covenants that default you if you don't hit your business plan on time, that's dangerous. So I think that where we're at right now is there's clearly been just a correction when it comes to where rates are. It's leading to tons of folks struggling to get taken out of, we'll call it transitional or development projects. So the projects are still very viable and you still have an incredible demand. Certainly in multifamily is a core of what I do, but there's still just an incredible demand for, new well-located assets. These things aren't dropping like 50% in value, but you could see that there are some folks there that they over-levered. They're going to have to come up with some creative solutions to get taken out of construction debt and in some cases mezz or prep. And so I think that that's where I'm really spending a lot of time is focusing on what are going to be those gap solutions. CPACE could be one. This ground lease bifurcation could be another. Some cases people will just say, I need to bring in some prep, give up some economics. But I think that's what we're experiencing more than anything now. I mean, rates have gone up 200 basis points. I mean, it's like, you cannot, and quick, so what happened is all these debt funds that had really cheap capital, that was taking out folks like right after they completed construction, they've either gone on pause because they also access money through different lines and, facilities. And so they're either on pause or their money's gone from like mid 200s over SOFR, which SOFR's also gone over, it's over 1%, right? You think about when it was like, 15 basis points not too long ago. So the rates are now, like for takeout deals, like it's like over 6% when you think about the index plus like a 450 spread, that's where you're at. So it's gotten way more expensive. And I think it's leading to a lot of folks almost being forced to sell. I think that's happening in a lot of cases. It's very tough to refi out of deals. And so I really, again, kind of just going back to this whole idea of how do you get creative on your takeout? CPACE and ground leases are going to really show up more and more as a way to maybe get you that extra 5-10% leverage that you need at a reasonable cost. That's the big issue right now is it's very tough to get taken out.
Tell me something. What would be your suggestion to a developer, to an operator who's struggling right now with the environment and he needs to maneuver a solution? He doesn't want to sell, or she. They don't want to sell. They want to keep the property. They want to actually get the benefit from it. They say, okay, this is an environment that we have today. Tomorrow it will change. Maybe not tomorrow, in a month, in 2, in 3, in 4, maybe in a year. I want to be able to pull it through, push it through, not to lose the property, so I can get to that side where I'll be able to refi. What would be your suggestion to those type of professionals?
So I think, look, again, being biased, but I think a best-in-class advisory team that specializes in doing your asset class is critical. Our niche, our team, I mean, this is like the top team that does multifamily development and takeout business. But I think that you want a team that's going to show you as many options as possible, like viable options, not just throw stuff out there. The more options you have, the better you could execute. You don't want to rely on any one. So I think have a team that has tried and true options, says, here's the reliable ones. Let's say if it's multifamily, that your go-tos are going to be agency, a backup in some cases, maybe even HUD is getting more limelight now because that's still very viable for a lot of products. Even CMBS to an extent. But that the go-to is going to be agency. Then it's like, well, what else can you do besides that? Everybody can do agencies. Like a lot of developers might think for their takeout. Do you have any bridge capabilities on balance sheet? If not, how would you arrange bridge financing? What else could you do? Do you know about these products like CPACE or ground leases to bifurcate? What about prep? So I just like being at a shop. What I found my biggest challenge, and we're talking a little bit about how COVID impacted us, is I saw like my pipeline fall off a cliff early in COVID. I found like I was so locked up. I had I was sitting on like maybe 110 CPACE proposals, and I was like, I mean, half of them are dead, and the other half are going to be really limited. And I had a bucket of capital that was super limited, and the source of capital was starting to clam up and say, oh, we only have these certain asset classes, and so I knew that what was so needed is you needed to be a platform that had a variety of solutions. And so I looked at some of these shops, and Greystone it just has such an incredible reputation. There's such an entrepreneurial spirit. And you talk to the chairman, as far as he's concerned, he's just getting started. He's like 35 years in, and he's built like one of the premier organizations. But you see some of the moves, like with JV with Cushman, buying a significant interest in one of the biggest DSTs, Pasco, in the industry. He was hired on, as our incoming CEO, a leader of one of the top banks in the country. So I like being at a shop that just has a robust balance sheet, could act entrepreneurial, and could just throw things out there that other groups can't. So I like that. Doesn't have to be me, but find a shop that could show you options, and could give you a variety of ways that you could execute, and isn't going to be pigeonholed into one. That's the big takeaway.
I was exactly about to ask you, how is it being in Greystone? How is it being a part of it?
It's amazing. It's an amazing culture. It's absolutely exceptional, and it's really neat to be able to have this unique thing that I had. The CPACE guy, because we were talking a little bit about building opportunities to have conversations and relationships. A podcast, having a show is such a great way to be able to connect with people and hear about interesting things that people are doing. It's been so cool to have this thing that people hear about. And they're like, oh, let's talk to that Lipkin guy. He does that CPACE thing. And so it's led to so many great conversations with folks across the platform. Absolutely love it. And I think there's just so many amazing things in the works over these next 12, 24 months. I love this capability to be able to act as a potential buyer through this DST platform that we're rolling out in a big way. Some folks who are talking about what are people doing when they're not quite stabilized, but they finished construction, they're pre-stabilized. And they're entertaining options right now in the market, and they're not getting what they want on the refi, possibly selling or recapitalizing, crystallizing your interest is also something that I've now looked at as an option for a few folks that just were like, hey, the refi is not getting us where we need. So it's been tremendous. People are amazing, best in class. Couldn't be happier.
I love it. Is there an area, you said development is more the thing that you're focused on, but is there a preferable area that you're focused on?
So I love the senior housing space. I think a lot of folks have kind of talked about that the demographics are just crazy when you think about the population over the next 10 plus years in the 65 plus segment. I think a lot of multifamily developers have started to get like, hey, multifamily game's getting a little crowded. It's been crowded. So I think they've started to see that, why don't we look into senior housing? It's obviously an operational intensive business, but I really love my ability to execute with a one-stop solution with CPACE and one of our in-house capabilities. So I would say for senior housing developers that have a track record, they have a platform, ideally a handful of existing assets, that's like my big niche right now. I mean, I still do multifamily, but I find the senior housing space, there's a lot of folks that they kind of take that similar attitude to what they do with hotels, and they say things like, oh, it's an operating business, so we don't do it. A lot of lenders say that. And so I love that. If anything, Greystone's like one of the top, when it comes to senior housing space and skilled nursing lenders, certainly on the HUD side. So to now have this construction bucket that we could help a developer, get out the ground, get them really competitive terms, and then they could seamlessly transition into like either a, Freddie exit or a seniors team or FHA. That's my go-to right now. I think that's a best-in-class execution for any senior housing developer that has a little bit of a track record. That's my niche.
And location-wise?
Yeah, I think location is much more flexible. I think it's more going to be the asset class and the sponsor. Sponsor is really the main focus. We're really going to focus on somebody that's demonstrated results. They ideally have done it a few times, but they could be doing it in really any market in the country. I mean, we're pretty flexible. I'm not
You're focused on the who. You're not focused on the where.
Focused on the jockey.
Perfect.
Yeah.
I love that.
It's amazing. Usually the right person could really figure out how to handle inevitable challenges that come up during any development. So absolutely the who.
We always say that a good operator, developer, a good sponsor will always take a piece of garbage and will turn it into gold. And you could have someone who's not that experienced who could take a phenomenal project and take it down the tubes. Yeah.
True.
Kill it.
True.
So
Yeah.
I love the perspective. Adam, it's such a pleasure having you. I'll tell you, we could continue the conversation. What I want to do now, I want to tell everybody, guys, look at the links above and below, how to reach out to Adam. Adam, if you could tell everybody how they can find you.
Yeah, I mean, I'm very active on LinkedIn. I think that you have an incredible presence on LinkedIn, so a lot of listeners, viewers are probably going to find it at least there in one spot. Look me up on LinkedIn. LinkedIn, Adam Lipkin, CPACE guy. You can find me there, and then I think my website, I also have adamlinkedin.com. But I would say just go on LinkedIn, look up Adam Lipkin, and then just send me a direct message. I'm very accessible. Happy to talk through all these situations. And, point you in the right direction or help you out directly.
I love it. You guys heard it, and I hope you guys learned something today. And if you are excited about this option of CBase loan, to go and talk to Adam and see what you can do with some capital that you guys need. Here's your chance. You got an advantage. You just got to know him, and probably this could change your situation. I hope you guys enjoyed the show. And I'm going to see you in the next show. Take care, you guys.
Thanks.